Good evening, market. Adil Fazal here, market analyst for CFDs.com, a leading spread betting and CFD brokerage. Be sure to visit the site and find out more at www.cfds.com, or alternatively you can visit the educational website, which I provide content and update regularly with latest charts, etc. at www.cfds.education to learn more. Okay, this is a end of day market wrap up for Monday the 21st September 2015 for the FTSE 100. Okay, let's gain an insight as to how this index performed today. First of all, Asian markets, that's what we always observe. The Shanghai was very impressive overnight, almost up by 1.9%, and the CSI 300 also up by a impressive 1.75%. The Hang Seng, although Hang Seng was negative, I did do my analysis on the weekend, and I have updated my charts. If you go to the website www.cfds.education, you'll see that I did mention that the Hang Seng certainly remains weak, although the Shanghai certainly is into potential support and remains bullish. Okay, so we had the bullish sentiment overnight from China, and that certainly was indicating a move higher on the European markets too. Now the stumbling block that we had was the Volkswagen shares. Okay, Volkswagen was unfortunately involved in some misdemeanor. Okay, and the shares actually got hit hard. So that certainly dented sentiment to a large extent in Europe, and although it helped the FTSE from the Chinese perspective, the Chinese market certainly helped propel the FTSE 100 higher, but the European markets were certainly under immense pressure. Now we did have the Greek elections obviously over the weekend, so the concerns were alleviated from there. Also the euro was down quite substantially as well to a large extent, and that certainly did help the European markets to rally later on in the session. Okay, now Chinese markets was the overriding factor, or the bullish overriding factor, and then we had uncertainty from hawkish comments from Volkswagen, weaker US home sales data, etc., etc., which obviously caused the US markets to flush towards the session late before they recovered. Okay, so a lot of reasons, a lot of variables with regards to the FTSE 100 today in terms of its movement. And also we did have Mr. Haldane's comments from last week as well, still resonating with regards to a potential rate cut or maintaining dovishness as opposed to hawkishness. That certainly was a contrasting view. Okay, so in terms of the economic data, in terms of the calendar this morning, we did have weaker in terms of European PPIs from Germany. That certainly came out weaker, so that obviously helped the QE trade and forced the euro lower to a large extent. European current account data came in stronger than expected. That's literally, I mean, we did have German diagnosis of the German economy was pretty strong, so that certainly helped. The German DAX bounced and moved to the highs, and like I said, the bearish factor from existing home sales data that certainly didn't help the FTSE 100, nor did it help the US markets as well. Okay, so in terms of the FTSE, China, like I said, was the only real bullish fundamental variable that helped the markets afloat. I'll maintain it, I'll keep afloat until obviously the FTSE 100 did. The oil, should I say, the commodities certainly came under pressure. Before we talk about that, let's just bring up the chart of oil actually. Okay, so the 60-minute chart of oil at present, as you can see here, we had a flush on the 18th. And today, obviously, we started to move higher, and that obviously helped the FTSE 100. And that's primarily due to the fact that the Chinese, obviously, the US FOMC did not obviously cut rates, and that's obviously the weaker dollar is obviously helping the FTSE, the actual price of the oil. Also, with regards to the improved performance from the German economy, that obviously helps oil itself as well. And China being higher as well overnight certainly helps the oil price, and that obviously kept the FTSE afloat and kept it moving higher. We did have a intraday pivot high, I think, of around 6160 on the FTSE 100, which was quite impressive. In terms of copper, let's just bring up a chart of copper. Let's see the actual move on copper itself. It's stabilized. It did come off its highs and did reverse. In terms of gold, gold itself is still consolidating on the 10-minute chart. Okay, that's basically the insight there. Okay, China overnight, we did have this impressive, obviously, move higher towards the evening on the Friday, and then the markets obviously gave back. Even though with China obviously being impressive, the market certainly gave back in terms of the Kiwi and the Aussie, and that's primarily due to the hawkish comments later on in the US session. Okay. Now, with regards to the FTSE 100, let's bring up the chart of the FTSE itself and try and give you an explanation. The weekly chart itself does remain still a concern to me, given the fact that we have this bearish formation here, bear flag. We're consolidating in the lower 50% of that red candle, which certainly isn't a bullish sign. But having said that, with regards to these new dovish comments from Mr. Haldane, and certainly seems to be a swing in terms of the Fed. If the Fed is reluctant to raise rates, it's very hard to believe that the BOE will do. So they will have an excuse in terms of raising rates, and that itself will help sterling, well, help the FTSE move higher, i.e. causes sterling to move lower, and obviously pushes back rate hike expectations, if not already been done already post FOMC. Now the FTSE itself is consolidating from my perspective on a daily chart. It's consolidating here. It's not making lower lows. It's currently a higher low, and we are looking for a thrust higher to the 6,400, and hence the reason why I remain swing long on the swing trading service or the fundamental analysis service. Although the weekly chart, like I said, is a concern to me. Having said that, we have put in a pivot low, which is the 5800 bottoming tail. Given the fact that oil and copper both have inverted head and shoulders formations on the daily charts. So if I just bring up a daily chart, you can see you have an inverted head and shoulders formation on copper, and obviously the fundamental reason for that to move higher at present will be the fact that the FOMC have been reluctant to raise rates, which in turn should help emerging markets and obviously help the Chinese markets too. Bringing up the chart of the dollar itself certainly seems to have put in a potential pivot top for now. From my understanding, although again everything remains fluid, there was some damage control today. I mean, some of the hawkish comments coming out of the FOMC certainly have realised that they can't afford to allow the dollar to fall, because obviously that then destroys other QE programs. Okay, and if it's destroying other QE programs around the world, then that obviously hurts equity markets. So they have a duty, in a sense, to keep the dollar trading sideways from my perspective. Not high, because obviously that hurts their own exports, but they need to maintain a certain balance, okay, that allows other countries to maintain their QE programs, which means depauking their currencies and obviously helping their exports, etc. Just take a look at the Euro USD, for example. The Euro USD rally recently has hurt European equities, and I'll discuss that in the European equity analysis. Okay, so at present, don't be surprised if the dollar just trades sideways from here. I can't see a new high being made, given the fact that the FOMC are reluctant. So we are looking at a sideways trading period, and obviously focus will remain on economic data. That'll basically be the emphasis there itself. So obviously that will help the commodities to a large extent, given the fact that we can't see any inherent strength or fundamental strength from the dollar itself. Daily chart of the FTSE 100, again, like I said, we are trading sideways. We're in the sideways zone, but we are building a higher low. So from my perspective, bullish bias on the daily chart. 60-minute chart, again trading sideways, choppy price action at present. We did hit the intraday high, like I said, of 6168, which was pretty impressive, before we obviously gave back and started to move lower based on the hawkish comments. Dollar rising, Kiwi Aussie falling, and obviously the oil prices coming into resistance as well. Copper and gold certainly coming under pressure, and obviously the weaker data from the US obviously hurting sentiment as well. So all those factors put together certainly did not bode well. Okay. Now the 10-minute chart of the FTSE 100 itself, we did hit this pivot high here at 6168 before we reversed. There is an unfilled gap that we need to fill above. Okay, we did have an inverted head and shoulders pattern, which really does, to a large extent, still does remain active. So just keep an eye on this. This is your left shoulder, looking at your head below. You're obviously putting the right shoulder, and we're moving higher. We're coming back, retesting, and looking for a potential thrust higher. So if you take the pivot high of 680, the neckline at 6150, take it down to pivot low at 6050, you're looking at 150 point move higher, so you're looking at 6250 above. So that's basically the zones that we're looking at in terms of the FTSE 100, and obviously the unfilled gap at 6200 remains open. Provided the Chinese markets stay afloat, then don't be surprised to see a new high potentially on the FTSE in terms of this week. That gap certainly being closed at 6200, that certainly remains open and that remains live. You have this horizontal resistance at 6220 and the pivot high being at 6245. Okay, so that's basically the zone that we're looking at. Okay, all right. So okay, so The 5-minute chart, let's give you a little insight there into the micro chart itself. Again, you have these zones of support and resistance. The pivot low really is the one that I'm interested in, 6110. That should certainly hold, and we should certainly start to propel potentially higher. Pivot resistance remains at 6170, and we do have this zone here around the 6140 that you certainly need to observe as well in terms of profit taking zones. If the market starts to certainly there was a comment, a hawkish comment from the one of the BOE members later on today. If I can just go back and just recap that comment, bear with me. Let's just okay, let's have a look. Cash in Fed's party line kept, no, that's not the one. Interest rates likely to rise, says Bank of England Deputy Governor Sir John Cunliffe. So that certainly was a comment that certainly sent the FTSE to the, I think there was a low of 6090 at one point, the FTSE 100, later towards the session. Okay, so there certainly are bearish forces causing the FTSE to propel lower, but again, a lot of it is based on China. So let me just bring up the Chinese chart, the Shanghai chart, because it's so crucial at this current juncture. So let me just share this chart and keep this in the YouTube videos as well. So DJ Shanghai, bear with me. Okie dokie, so oops, daisy. I think I've got a smaller time frame, so I can bring up daily. Okay, here we go. So this is a chart that I think I've shared with you over the weekend. And again, please do visit the website www.cfds.education. It certainly is the website that I constantly update my my latest charts on. I just share this hopefully with you now. There we go. There we are. Okay, so there is your website. Certainly scroll down. Latest charts are certainly on there. My YouTube videos certainly will be accessible there. So I'm constantly updating that. Certainly encourage you to keep visiting that on a regular basis with regards to latest charts, trend lines and formations, etc. In terms of the Shanghai itself, yes, it has this bull flag pivot high, looking at 445. Again, the next resistance zone will be 476, 475, and obviously 540 and higher. So from my understanding and my perspective, the Shanghai, the Chinese market, certainly made a pivot low, and don't be surprised if you're looking at a FTSE 100 making a pivot low as well. Okay, so that's my interpretation of events thus far. Given the fact also Mr. Draghi is on tap this week, very important to read and learn the 5 key events. This is an important chart. Again, certainly read Kathy Leon's commentary. So Mr. Draghi is testifying in Brussels next week, or this week, shall we say, and unlikely his counterpart, central bank, he will most likely remind us they stand ready to increase QE. So that aspect is certainly alive and kicking. So given the fact that you have a central bank put, and it's all about central bank puts this market at present, then don't be surprised for the FTSE 100 to certainly start to propel higher from my understanding and my reading of the market. So I certainly remain overall long term, from a swing trading perspective, I'm bullish on the FTSE 100. On the daily charts, or should we say day trading, I am very, very flexible, as you know. I always react to market, so if Chinese market is up overnight, then I will maintain the bullish line, provided commodities, etc., and risk FX certainly remains bullish, and I will remain bullish. If the market starts to change and there's a geopolitical or socio-economic concerns that cause the market to come under pressures like Volkswagen this morning, then I will certainly switch bias very, very quickly, as people know in the live analysis service. Okay, I think that's a wrap for today, folks. I think I've given you insight on the FTSE 100, and I've given you the formation that you all need to observe for the next 24 hours. From my understanding, will be the inverted head and shoulders on the FTSE 100, which has the bullish bias. If the pivot low below if the FTSE trades below 6100, the inverted head and shoulders formation has been negated. If that's been negated, then we all know from a technical perspective, a failed pattern equals an emotive move in the opposite direction, and you'll be looking at revisiting 6050 again, and that weekly candle on the FTSE 100 certainly becomes active, the bear flag, shall we say, and that certainly will not be good news for the FTSE 100. Again, like I said, from a long-term perspective, again, I mean, if you are looking at a monthly view or a yearly view on the FTSE, then you certainly would not be a bull. You'd certainly be in the bearish camp. Okay, but from my perspective, it's a central bank world, and one should not get too bearish if the central banks are active in this market. Okay, I think that's a wrap. This video has become too long. Goodbye.